What is going on, everybody? Hopefully, you guys are doing well out there. It is Friday. Hold on, I have to check my clock. It is Friday. It's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we are joining you from the center of the financial world. We are in New York City, and I am running on absolute fumes, so we better not waste any time. Kick things off like we always do with Meta Platforms. Started the week at 513. I tell you what, it was a comeback week for a lot of these stocks. Wait till we get to NVIDIA. Meta up 2.7%, finished week at 527 and some change. I like this. So we often complain here on the channel about the FTC, the DOJ coming after these companies, but I think there are some things that they can do inside of the marketplace that would actually make these companies maybe operate a little more efficiently and maybe give a little level playing field. FTC is going to crack down on fake reviews and social media engagement, bots, fake reviews, getting paid for views. There's some things like this in the affiliate marketing space. There's certainly some other things that we've seen in terms of getting paid for reviews. I think the FTC could continue to do more here. Companies can disclose this even further and the practice can be shut down, and I think it will benefit everybody. Moving over to Apple, start of the week at 216, and Warren Buffett dumped his shares, but it seems like nobody else is. Apple up over 4% to finish week at 226 and some change. Now, Apple is accounting for 60% of all AI-capable PCs in shipments during Q2. So what a lot of people may not realize, if you don't use Apple devices, you're not up on Apple Silicon, which they've been putting in all their Macintosh computers for several years now. They ditched, probably correctly in hindsight, Intel to the curb. They started designing their own silicon and started putting in their MacBooks. Now, I've got one of the original M1 MacBooks, and there's a neural engine chip in there, which is capable of doing on-device processing for different types of AI. They've released the M2, M3. We might even be on M4 at this point from Apple, and they all are capable of doing on-device AI. It's just Apple doesn't have a lot of software yet that runs on that. But what's interesting about Apple is they have all these devices already in the marketplace. So as software makers roll out more AI that's not done in the cloud like a ChatGPT, but is more done on device, well, Apple already is there. Now, Tencent and Apple are in talks to monetize mini games. So these are these transactions in these mini games in Tencent, which is a huge app, obviously, in China. And this is for in-app purchases. So the two companies, the two giants, are in talks to potentially allow in-app transactions through the iOS payment system, which obviously, as most of you know, will give Apple a juicy cut of those transactions. Now, Apple is kind of bowing its head, if you will, to regulators, and they're going to allow third-party access to its NFC chip. Typically, in that NFC chip, this is something that's like Apple Pay and an Apple Wallet, but now you're going, if you're a third party, maybe like a PayPal, maybe even Visa or MasterCard, Chase, any of these different types of banks, well, they're going to have access to this NFC chip technology, have almost third-party access to it, and that will usher in probably some new software there. Now, Apple is moving toward a tabletop robot. I'm not sure if many of you remember, we did a report on this when it initially kind of was rumored that Apple is working on a tabletop robot. Really what I would think of it is an iPad that can maybe move a little bit. It's very similar to some of these Alexa devices that I've seen in people's living rooms or in their kitchen. It'll essentially be a screen, but it can move a little bit. It has like kind of a robotic capability of movement. I don't think we're talking about anything with arms, but this is probably the prelude to all of that. You start with a tabletop screen and then maybe potentially add on other features and other aspects to it. Now, we talked about how Warren Buffett dumped his Apple stake, but it was interesting. He had Ulta Beauty, which had a fantastic week on that news, and he dumped Snowflake, which was really well hyped when he initially had a stake in there. Now, Third Point said, I'll buy those Apple shares off you, Warren Buffett. He added some shares of Apple, and that is Dan Loeb's investment fund. Apple's iPhone, probably the most important press release we buried at the end, their iPhone 15 September shipments. That is seen build to a record high, 54 million units or 8% year over year. And that's 2 million units higher than forecast. And so I tell you what, Apple spends a lot of money forecasting demand. The fact that they are forecasting higher demand and they're setting aside more resources to get these iPhone 15s built. We had a press release last week that Foxconn was adding all these workers. I tell you what, they're planning for a big ramp up for the Apple iPhone. Moving over to Amazon, start of the week at 167 and boom, up nearly 5.9%. Finished the week at 177, and the big jump for Amazon this week was after Walmart said it does not expect a recession. I tell you what, sometimes, you listen to those people that call for a recession, and we all know those pundits either here on YouTube or on Twitter that have called 19 out of the last 2 recessions. They're just constantly thinking we're in a recession. And there's all these data points where you can constantly connect data points and say, hey, the SOM rule just got triggered, so a recession is coming or whatever. And it could actually be the case, but what I have found is actually listening to the retailers. One of the reasons why we open up the financials on the show so much when we do our earnings videos is that is where you get honestly some of the best information. And Walmart's saying it's not expecting a recession. In fact, it says in this environment, it's responsible or prudent to be a little bit guarded with the outlook, but we're not projecting a recession. So that'll be interesting to see if Walmart ends up eating its words or if it's actually true. Moving over to Netflix, so the week at 628 and some change. Netflix soaring, hit a support. You want to see this technically. Up over 7% to finish the week, really close to $675. Not a lot of news, though, out of Netflix. Now, the big winner of the week, nobody wants to be short. NVIDIA heading into earnings. I believe we're still a little over a week away for those earnings. We'll double check that on the technical segment. But NVIDIA started the week at 108, and anybody that was short covered this week, and anybody that wanted to go long into earnings went long because this thing was up over 15% to get back to 124. We're not far from the all-time highs, over $140 split adjusted. Now, Samsung, as we've reported over the past couple of weeks, had some high bandwidth memory, kind of their newer version. It was originally rejected by NVIDIA in terms of using it on the newest chips. Well, that got approved, and they said testing is going in plan. This is good. It's not a negative against SK Hynix or Micron or any of the other memory makers. NVIDIA is having trouble meeting supply, and so the fact that Samsung can come online with high bandwidth memory, it obviously is bullish for AMD and others that are using it as well. We'll talk more about this on our semiconductor show. I'll record that here in New York City on Sunday. Semiconductors could start recovering as soon as October. We'll talk broadly about that. The kind of outperformance that this sector has had over the past year, yes, you're having a recovery off of the lows, but will you outperform going forward? I think that's the question most of us are asking now. NVIDIA's AI chip, these are, I believe, the previous version, also the new Blackwell, which is expected now early next year. It faces, I hear this all the time, right? It's like the next Michael Jordan or the next Tiger Woods. You hear it all the time, but it almost never materializes. A new rival from Huawei in the Chinese market. As most of you know, it's not just the hardware chip that gives NVIDIA advantage. They have like a decade and a half lead in terms of software that is able to run these chips. They also have networking capabilities. There's more than just the GPU. We also have other startups, including Cerebras, which might go public next year. Now, AMD slides as reviewers online. I saw this on YouTube as well. Thought the new Ryzen CPUs offer very little improvement over the previous generation, although I do believe they lowered the cost year over year, so it could be that AMD realized this. Moving over to Google, the breakout rumors and the breakout talks are underway, but Google started the week at 163 and basically flat. Finished the week on the dot. Now, the company revealed and unveiled some new devices. They did this a little earlier this year, I think to get a jump on Apple, which tends to steal a lot of the headlines as it relates to cell phones later this year into the Q3, Q4. Well, they released all new Pixel 9 smartphones. And I tell you what, if I wasn't on the Apple ecosystem, I didn't have an iPhone, I think the Google Pixel phone would be absolutely the phone that I would use. Now, Interesting headline that we can read into a little bit more. The Peloton fitness classes are now available through Google's Fitbit Premium members. A couple of years ago, I don't know if many of you remember this, but Google bought Fitbit. Fitbit was a public company. It was kind of fledgling. Their stock wasn't doing that well. I think it got traded down to like a pretty minimal multiple in terms of sales, maybe even earnings, and Google bought them. And it's been a part of the company ever since then. Well, maybe this is kind of Google's way of could you imagine a day where maybe the Peloton brand is under Google? I don't think a lot of people thought Fitbit fit, but I think after a while it kind of makes sense. And Google is trying to continue to have more inroads inside the home. They've got smoke alarms. They've got other types of products that are in the home. Well, a Peloton also probably trading at a low multiple to sales. Maybe Google makes a play after testing its software subscription on their Fitbit platform. Now, Google BREAKUP, that's been the talk over the past week after the Justice Department basically is looking to push for a breakup of the tech behemoth after the company's or the agency's antitrust victory. I believe that was last week. Now, what was interesting is this is not going to be one of those breakups where you break off the search engine. I think more importantly for Google and maybe unlocking value for shareholders is breaking off YouTube. I mean, imagine in a hot market, basically the market that we have now in the stock market, if you could IPO YouTube. I mean, the multiple that Netflix gets, YouTube has to get that, maybe even higher, because they don't have a lot of content costs, because it's just people like me making the content for free, if you will. So Google's got some assets, but I saw the breakup wouldn't necessarily, it'd be maybe parts of the ad tech business, which I've always contended. I've bought a lot of ads on Google. I've spent over 6 figures in my life on ads on Google, and they're certainly worth it, but there's no transparency there. They're literally telling you what to bid. They're telling you how much the bids cost. You have some transparency, certainly more than in years past, but it would actually be, I think, kind of interesting if you were to break up certain portions of this company. But at the core, I think core Google, core Alphabet will probably stay together. Now, moving over to Microsoft, start of the week at 406, up nearly 3%. Technically, this one's looking interesting, up to 418. Now, Microsoft and AMD reported their earnings over the past week or two, and they're giving more credence and more confidence to investors that the AI monetization phase is underway. AMD is certainly just a kind of a tailwind from NVIDIA, tailwind from the entire semiconductor industry. Microsoft's probably more of a credence or support that AI software is certainly something that you can charge more for. I think we're still in the early innings here in terms of monetization. We'll get other companies reporting over the next couple of weeks. I think we'll still hear from Snowflake, a few other software kind of service providers, and we'll see how they're evolving from a monetization standpoint. We'll hear from Salesforce and others, and we'll see where it stands. I still think it's really early. I still think things are up to grab. And honestly, I'm not sure software is going to be the gold rush this time around. As I've always contended, I actually think it's going to be in robotics. And a company that's got a big robotics push going is Tesla. Start of the week at 197. And boom, over 9%, finished the week at 216. The company is pivoting away from cheaper, we'll put cheaper in air quotes, because the quote cheaper Cybertruck was $61,000, although in 2019 Elon Musk brought the Cybertruck or introduced the Cybertruck and said it would cost $40,000. Now that was pre-COVID, pre-inflation, so I think we can give them the benefit of the doubt, but it appears that the Cybertruck is going to be a $100,000 car. They've got a $99,000 dual motor version. They've got a $120,000 version. I got offered to buy one of the Founders Edition. It happened to be on the day that I lost my job, so I thought, maybe I shouldn't buy a $120,000 truck when I lost my job. I don't know if I could even get a loan for the car, so I decided to hold off. $100,000 car certainly puts it in a different stratosphere. You start looking at other $100,000 cars in the marketplace, brings in kind of the Mercedes G-Wagon, high-end Mercedes, high-end Land Rovers, and those types of things. Is the Cybertruck cool? Absolutely. Is it as cool as a Land Rover or a G-Wagon? I don't know. Now, Elon Musk's XAI company unveiled 2 new AI models, including Grok 2 and Grok 2 mini models, as this company has got a big old data center of NVIDIA GPUs. It'll be interesting to see the kind of products and software that Elon Musk is able to roll out there. And there was some that thought maybe there would be some downfall to, we had a former President Trump and Elon Musk conference call, I guess you could call it that, or hangout or podcast, maybe even. It was really just a phone call conversation. I only caught bits and pieces of this. This was on X, otherwise known as Twitter. And it appears to me Elon Musk could be playing chess here while people are thinking he's playing checkers. He's certainly thrown his support both vocally and I think even somewhat monetarily behind the former President Trump. I think no matter who wins, if former President Trump wins, obviously there's these big subsidies in EVs where if you go and buy one of these EVs, you get $7,500 tax credit. And really Elon Musk has built Tesla from the ground up on the backs, in part, maybe not all, but in part due to federal subsidies to buy the cars. So he's backing a candidate who initially was very vocally against that. In fact, it's probably something that Trump will do away with at some point if he's able to do that. On the other hand, you have Vice President Harris. If she happens to win, my guess is it'll be kind of status quo in terms of EV credits. It probably wouldn't be popular with her voters or her base to roll those things back. So in a lot of ways, Elon Musk is actually playing this very well. He is getting Trump on his side. So if Trump is reelected, well, then maybe Trump has a softer stance on those EV credits, which obviously benefit Tesla. And if Vice President Harris wins, well, those EV credits are staying in place. So both ways you look at it, Elon Musk comes out a winner. Now, technically, oh my goodness, folks, we are in a very interesting spot. We broke down on the S&P 500. We snapped all the way back. We talk about these middle of the channels. It didn't get quite to the middle of the channel, but you've seen over the past two dips that we've had in the S&P 500, there is support oftentimes before you get all the way to a bottom of a channel. Key thing for the S&P 500, really heading into NVIDIA earnings, is you'd like to see this one make a new higher high. So we got to get probably close to 5,700 on the S&P 500. If you don't, there are going to be some people that say, hey, this was just a failed back test of the previous trend, which you could draw in here a number of different ways, and that we're getting rejected here and we're going to move lower. That is potentially possible. Wouldn't really mean anything in the intermediate term. You'd still be in a longer term uptrend. Either way, you're still looking to buy the quote unquote dip on this one, and certainly keep an eye on the middle of the channels. That's why I tend to dissect these with a light green line, which means you're kind of lightly buying at those areas. Dark green lines are kind of when you're, not to use a poker reference, but you're more or less going all in at that point. Now, Meta, we thought after earnings, look, we probably could retest highs on this one. I mean, I tell you what, we're getting here. Looks like we're going to make a new higher high on this one. Anything over 550, I'm probably a seller of Meta, at least in the shorter term. If you had 100 shares of Meta, wouldn't be the worst spot to peel off a couple of shares. Not the whole 100 shares if you don't want to, but this is an area where you can take profits because you're probably going to get rejected here pretty soon with Meta. Pullbacks to 480, anywhere lower than that seems like it's a good buying opportunity. Apple certainly found some support. Look at all these green candles. It's a daily. Oh my goodness, we had a bunch of days in a row of green candles with Apple. You'd like to get above the previous high though of 237. Right now we are not there. A failure of doing that will likely bring in testing of these levels at 208, 197. Those areas should be bought. Amazon, we didn't take off the channel. And the color of my lines are a little off. In fact, they're flipped. Maybe it was the 4 a.m. flight that I was on. But we didn't take the channel off because, first of all, it has stayed intact so long. You did hit an area of support. It was news-driven. It was earnings-driven. But as you guys saw probably when you went through Amazon's earnings, it wasn't that bad. And sometimes you can claw your way back into these channels. And it was kind of a once in a trend type move. And now we're moving towards the top. I'd be a seller though of Amazon as we continue to move higher. Not that I don't like the company, but I like making money a heck of a lot more. Now, Netflix found a beautiful place to bounce off of. I think we're absolutely in that trend. I mean, we got all kinds of lines here with Netflix right now, but more or less you've been making higher highs, higher lows for a long time on this one. It's really just a matter of time to really firmly retest this area at 700 again. If you break higher than that on Netflix, you probably can run. 720, 750 is probably in play. I would be a seller of that move. NVIDIA found beautiful support here at a gold line, about $95 per share. Wouldn't want to see shares get below that. Get below that technically brings in probably 75, even 55 into play. But it's still decision day as we move forward with NVIDIA. They report earnings in 12 days. That is the 28th. So it's not next week, but it'll be a big talk in the market. There'll be positioning in place with NVIDIA as we head into next week. But still, in the shorter term, you have a high, a lower high, and now you could maybe potentially confirm another lower high. Now we're nitpicking, obviously, because as you spread this one out, yeah, you're just in a monster trend. You're towards the top of the trend. Top of the trends are areas where I think you're doing some shorter term trades. You can make some money, but this isn't an area where I would go long. Wait till NVIDIA reports their earnings. If you do get a blast off of earnings are great and nothing would surprise me. You get a new higher high, well, that's okay with NVIDIA. You're going to get probably a back test of trend. That'll be your area to move on that one. Now, moving over to Google, found a little bit of support here, really consolidated tightly in this 160 range. It should be an area of support. It's the top of the previous channel. Find support here with Google, get some positive momentum on the news front, maybe the DOJ, whatever. You get a new higher high on this one. This could propel up to $200, probably heading into next earnings. You get rejected here. This is you are moving on that one. You are definitely buying the dip on that one. Microsoft was in kind of a longer term Amazon, even NVIDIA type uptrend. There's probably ways you can still draw it in. But what I'm seeing more recently with Microsoft is you're in kind of a shorter term uptrend. We are just starting to claw our way back with these uptrends. You can actually, if you're in it for kind of the shorter term money, you can start peeling this one off in the 430s, 440s, 450s. That would be when I would start I even have in my Robinhood account a couple of shares of Microsoft that I've been kind of doing shorter term money on. And then obviously I have a longer term account where the Microsoft shares are just going to sit in there and you're going to reinvest the dividends and probably a stock split at some point and just benefit it from it long term. But shorter term, I'd start peeling off at 450. But we could make another higher high on this one that would take you up into the 480s. That would be an even better place to maybe unload the rest of those. And Tesla's found support here at 195. It's constantly done that, but I mean, the deviation and the delta where Tesla support is, I tell you what, it is really wide. But if you look at this one kind of like this, we've been consolidating. Yes, you've gone down to 136. But more or less, you've been consolidating between 166 and we'll call it 280 on this one. We're basically in the middle. You could move from 216 to 280, and that would really just be a continuation of the consolidation. You would like to see this one push above kind of that 280 level, make another higher high. It would confirm that. Dips in Tesla after that should absolutely be bought, folks. That was the FAANG Stock Recap Show. From the closest we've ever been to Wall Street. That was Friday, August 16th. I hope you all have a safe and fun weekend. Be sure to look down in the description below. I have links to all my social feeds. Please check out our new YouTube channel. We're posting a semiconductor show there. We'll be launching much more new programming, probably on a daily basis on that channel here very soon. Don't forget to like, share, and subscribe to the channel. Thank you for all your support. I'll see you again next week. Good luck with your investments.